One of the biggest shocks of the past several weeks has been this extent of the US dollar decline. We see that everywhere. The headlines point to that. The US dollar just hit its lowest level in over 4 years, losing 10% of its value in 12 months. Earlier this week, the dollar suffered its deepest one-day drop since last year's tariff rollout. And at the same time, we just heard President Trump saying that the US dollar, and I quote, is doing great. What do you make of this? And what is driving the decline in the value of the US currency?
Well, in our book, the bearish dollar thesis is laid out with the foundation that started in Washington, both Republicans and Democrats. It's not just fiscal irresponsibility and crazy deficits. It's years and years and years of sanctions with our trading partners and also global partners, foes and alike, and then property confiscation, which we talk about in the book. So these are old narratives, but they kicked off the dollar decline in 2022. It's like I call it hubris, the ultimate hubris in Washington. When you take a club and you hit countries over the head with sanctions, 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 you're bullying the world, Democrats and Republicans. You confiscate property in Russia. It's still property confiscation, and every other emerging market country in the world since that moment in 2022 is now thinking, oh boy, I got to be careful with where I put my. Do I want to have too much money in dollars? And then you come into the whole trade war with the Trump team, and at the end of the day, we've taken 5 million jobs out of the United States, right? The last 20 years. We've exported them around the world. We've decimated the Rust Belt. From a national security perspective in the United States, it's a bad lot. Literally, like we have to import things, many things around the areas of national security, especially rare earth metals, for example. So you've got the Greenland thing, you got the trade war. Trump's trying to flex some muscles, trying to bring some jobs back, and America first, because the Republicans view that America's been last for a lot of years, and all that translates into is more conflicts, more bad kind of relationships with our trading partners, and so the whole global complex has gone from a unipolar world to a multipolar world, and that's what we talk about in the book. And that's part of why you got this big decline in the dollar. You've got went from a unipolar world to a multipolar world.
When President Trump said the dollar is doing great, it actually reminded me of Warren Buffett. I saw his interview last month, and he said that the tendency of a government is to debase its currency. So it kind of makes me wonder if Trump is willing to tolerate a weaker dollar, which is why he's saying things are going very well, the dollar's doing great, if he's willing to tolerate a weaker dollar to effectively push rates lower and to potentially boost US exports.
Well, we were in Washington maybe 6, 8 weeks ago, and I could tell you there were two camps in the White House. I mean, we spent some time at Treasury, but when you spend a lot of time in Washington, you realize there were two camps. There was the kind of more bullish dollar camp. I wouldn't call them rhinos, but there's certain Republicans that are more traditional. And then you have the J.D. Vance, Don Jr. wing, which at the end of the day, the Rust Belt, like I said, the United States has been decimated in many parts. Those 5 million jobs left the United States. And they essentially want to rebalance the world with a weaker dollar, right? And that's part of our thesis in our book. Our book is essentially about financial assets, growth stocks and bonds. So bonds are tied to the dollar, right? And they're just paper certificates, right? Hard assets are more tied to, if you're in a dollar debasement regime that is really intentional, then to try to balance out global trade, bring some jobs back home. Don't get me wrong. They're not going to bring 5 million jobs back to the United States, but may they bring 1 million jobs back? Yes. But at the ultimate end of the day, when you have a $38 trillion debt hole, right? There's two ways out. Default, what we call debt jubilee. It goes back to the Bible, right? Or monetize the debt. by massaging interest rates below the rate of inflation. So and you can't come out as a Fed and Treasury and the White House and say this, because they're already shocking enough people in the world in the White House with Greenland and trying to flex the muscles through trade. But mark my words, there's no question in my mind, and a lot of institutional investors that we work with, some of the biggest institutions in the world. This is a policy of massaging interest rates, pushing interest rates below the rate of inflation, and then you can kind of monetize the debt over time and get out of that 35 or $38 trillion debt hole.
Larry, for our viewers who may not be as familiar with financial terms, could you maybe briefly explain what do you mean by monetizing the debt?
Well, if you have inflation and it's running at 1-2% for a long period of time, and you have debt, when inflation goes from 1-2% to say 3-4, over time, your debt, which is paid back years later, right? Mm-hmm. So say you take a 10-year bond. It's $1,000 face bond. You borrow, Uncle Sam's borrowing $1,000 just to keep it simple for 10 years, and they pay you a coupon. Mm-hmm. And then after 10 years, they give you your money back. But if you're in an inflationary world, when they give you the money back, they're giving you money back with cheaper dollars. So in a way, the federal government's getting out of the debt that way.
Right, exactly. So there's this understanding that a debt problem, as you mentioned, is followed by devaluation of the currency. And we see central banks around the world purchasing gold, and they're doing that not for profit. They're doing it to effectively escape the dollar and the risks associated with the US dollar and US dollar-denominated assets. So gold has officially overtaken US Treasuries and central bank reserves for the first time in the last 20 years. My question is, could Washington realistically, you mentioned there were two sort of camps, right? So could Washington realistically stabilize the dollar if it really wanted to, or are we past that point?
Well, if the dollar train wreck got out of hand, they would definitely do some things to stabilize the dollar. For the president of the United States to get out there this week and say the dollar's fine, that by definition is going to shock and scare some people, right? Because JP Morgan used to say in 1907, beware of the banker who claims he's not in need of your capital